Hello, everybody. We're back. Little truth or skepticism. Mr. Radigan, how art thou?
First one of the new year. I'm very good. I've been analyzing the tape. I've been looking at the charts. I have been evaluating the numbers.
I'm not buying one single word of that little intro by you.
Well, that's what I've been doing. I mean, you don't have to believe me. I've been sitting here.
Yeah, I've never thought of you as a tape reader.
I've been looking at the tape.
Yeah.
Analyzing the numbers.
Yeah. No, I'm not buying it.
I've been reviewing the charts.
No, not buying it. There's two things I don't see you doing. You're not a tape reader, and you're definitely not a television watcher. So I don't look at either of those two things and think Dylan Radigan.
Because here's the number one thing about Tom Sosnoff.
Hold it. Do you even have a television?
No.
I didn't think so. Okay.
I don't.
Yeah. No, I didn't think so. Makes sense.
Yeah. But I read about what happens on television sometimes on Twitter.
That's cool. I like that. That's cool.
Like, I heard that guy had a heart attack on the football game. That was terrible. And I hear there's a whole thing with the House of Representatives. But these are not topics that are interesting to me because I'm busy reading the tape, analyzing the charts, and watching the numbers.
Let's do it, brother. Let's do it.
So when I first met Tom Sosnoff said one thing to me.
Oh, God.
He said, nobody knows anything. He said, and you have to understand that nobody knows anything. And as long as you think that somebody knows something, or as long as you think that you know something, you're going to end up in losing positions on average over time. And as I was reviewing the tape and analyzing the charts and watching the numbers, I noticed, for instance, that energy prices, which went wildly higher just 11 months ago on the news of war. Was that a good sound?
No. But some trade went off. I just had to turn off the sound. Go ahead.
A bad sound?
Yeah.
Sounds like somebody's watching the numbers. And yet energy prices are basically all the way back to where they were before the war. I mean, not quite, but that you're seeing a total that the anticipated horrors of people not being able to heat their homes in Europe and all the horrors. Or if you look at all the run-ups during the pandemic, the Tesla run-up being the most obvious one, but you can go Zoom, Peloton, it never ends.
Yeah, sure. Okay. I'm with you. Go ahead. Where are you going?
So on the one hand, you have an endless parade of evidence that nobody knows anything.
Okay.
On the other hand, you have a management culture that believes that they put the right person in charge. If I select the correct CEO, if I select an experienced head football coach, it could be anything. If I select the right person, that person will know something and be able to do something that other people can't do. And I'm curious how you reconcile overwhelming evidence that nobody knows anything with a culture of paying extraordinary sums of money for, I'll use the CEO example as the best one, for expertise on the belief that that person knows something.
Okay. That's
where I'm going.
Because they are two completely different things. You are giving me an example of apples and oranges. They're not even.
But if nobody knows anything, why does it even matter who's in charge of anything?
Hold on. Let's define no one knows anything. A professor, a math professor walks in to a math class at a great university and teaches a class on advanced calculus. That math professor knows a lot about math. Okay. So it's not a function of, it's not nobody knows anything. You go into an art gallery and there's an art historian there that knows a lot about all the works that are in that museum or that are being refinished, whatever it is. That person's an expert, a domain expert. If you ask me about market structure and about derivatives products, I know a lot more than somebody that's never made a trade before. So there are definitely domain experts and people that know lots about lots of things. But when you're talking about a efficient, random marketplace, at least we believe marketplaces are efficient and random. If you're a pure kind of efficient market theorist and you believe in marketplace efficiency and marketplace randomness, then nobody knows anything. That makes sense. But how can I have extreme expertise on a subject that might be market related? Energy supply chain, right? I have extreme expert. There are people that know a lot about how much natural gas can be pumped and what the diameter of the pipes are and who's the loading speed at the LNG terminal and all a billion variables.
Sure.
But they can't anticipate future pricing.
That's right. So there are aspects of that example that you just gave where there is domain expertise on the one hand, and then on the other hand, there are aspects of it that are random. So, for example, you can be a domain expert in the energy field. You can be a biologist, you can be a chemist, you can be an engineer, but that doesn't mean
CEO of a big natural gas.
You can be the CEO of a big natural gas company, but that does not mean that you know what. That does not mean that you know what the price of the underlying natural resource or whatever that commodity is going to do next if that commodity lives in a efficient random marketplace, which most commodities do. But to go back to the other example that you gave earlier, you talked about, sports teams and managers and things like that. It's interesting because there is a lot of proof that really good managers and coaches and things like that, they have incredible domain expertise. It's not, one team can be clearly better than another based on talent. So that's not the result of a sporting event, is not a random event. And, how much difference does a manager, a coach make potentially? In baseball, they say it's the greatest manager ever made 3 games difference in a 162 game season. So a bad manager could be -2 to -3 games, and a good manager could be +2.5 to +3.5, 3 being kind of the max all time. So it is not dramatic, but there is a little bit of a difference. So a good manager a good coach that can make good decisions and whose players play for them, don't give up on them. Yeah, sure, that could be different, but the results of that game aren't random. I mean, if Duke plays, some smaller school and Duke has more talent, then that in itself does not make Krzyzewski a better coach. Do you know what I'm saying? It's just
I understand, but do you understand what I'm getting at is I find it fascinating that we can acknowledge domain expertise at the most extreme level, the most informed.
How can you not? In the world. How can you not acknowledge domain expertise?
No, but that's not my point. Of course, you must. You can. How could you not acknowledge domain expertise?
Right.
So then, how can domain expertise, which everybody can acknowledge, not translate into a more reliable opinion of future outcomes?
I don't even. The question doesn't make any sense to me.
What do you mean?
Because it doesn't make any sense to me. Because you're too smart to know random outcomes are random outcomes. So just because you understand how a random generator works doesn't mean you can pick what's going to happen next.
Of course. But then you're saying that the price of natural gas is a random outcome, that the ability of an expert to analyze fundamental forces, or
yes.
the price of a computer chip or an automobile,
yes.
or whatever, that And the reason it's random is you're saying that the edge of the expertise, the gap between where expertise ends and where unknown variables begin, is still too big for any expert to cross.
If there is, this is why going back to our last week's conversation about AI and machine learning, this is the point at which machine learning and artificial intelligence stops. It stops at the line of randomness. Like, this is the most difficult thing, I believe, for people to understand. But I agree. It all works up to that line. There's a line in the sand, and that line is where randomness begins. So in other words, the engineer who can build the most brilliant, the best engineered random generator machine, that person that can think of every possible variable to go into building that piece of technology, whether it's software or it's machinery, whatever it is, that person still has no better chance of knowing what the next outcome is than you or I do, regardless of their domain expertise.
And that, to me, is a staggering statement. When you look at the number of resources that are allocated to whether it's expert money manager,
of course, that's the whole. So now you've just uncovered the whole reason why we built Tasty. This was the whole reason 10, 12 years ago why we built this thing. We said finance is so ridiculous. Like, why would I sit there and watch some cable network that you used to work for to see what those guys think or what their guests think, because the outcomes are random anyway.
And yet you understand how difficult that is for people to ultimately accept, because on the other side of the equation, there's a complete admiration, respect, deference to expertise. So people say, "Oh, well, the Goldman Sachs technology analyst, or pick your favorite expert or domain expert." And how can it be that the domain expert ABC 123, the most smartest person in the world on this subject, how can that person have no better chance of predicting the future price of whatever the expertise is in?
Yes.
Than
incredible. That's why people love sports, because in sports there actually is a skill level difference, and a good team is a good team. You can analyze sports and you can say, hey, you know what? This is a better team. They're supposed to win. And the teams that are supposed to win most of the time. And so you can have that discussion. It's not, the results aren't, of course there's upsets, of course there's outliers, but the results aren't random. But in marketplace, the reason that there's so few retail participants is because it's frustrating. Because the frustration stems from, how could this possibly be random? It makes more sense to all of us if I believe that Joe Blow over there, or if Dylan Radigan has an edge because he's smarter than me. He's got more domain expertise. It makes sense.
Better information.
Has better information. Access to better information. That's right. So what do you do to resolve that? Well, you level the playing field by making the mechanics take over. That is the beauty of what we built, is that you finally get people to say, hey, you know what? It is just, give me the freaking mechanics. Do you know that people used to believe that there was a huge edge in poker? They used to think that, like, these old school poker players, I don't even remember, like, I'm Real Slim and all these other guys, these crazy old school, I forgot all the guys' names, but all these old school poker players, they were so good because they could bluff and do all this other kind of stuff. But it was all just a farce. Poker is, Joe Blow off the street has the same chance of winning as everybody else because the results are so random. I mean, there's obviously, people understand the odds now better and everybody plays by the book and the whole deal. So maybe there's, a fraction of a percent of edge, but in the stock market, there's zero. It's the beauty of it. That's why the markets are so tight. That's why high frequency market making exists. That's why it's a game of speed, nothing else. It's brilliant.
But when you look at people, that acquire custody of billions of dollars of other people's money, whether it's a hedge fund manager, Bill Ackman or Carl Icahn or any sort of famous names that have a lot of custody of a lot of other people's money. They take custody of other people's money for sure because they persuade those other people that they have better information, that they have some level, that they have a skill set and a quality of information and analysis that makes them better equipped to make decisions about money.
That is correct. And I actually believe that some of those guys, like Bill Ackman, actually believe that. Like, I don't think I mean, obviously they're bright, but I don't think they really understand this business. And I think that they actually believe that. I've heard him speak too many times, and I've heard a lot of those hedge fund managers and, from the David Teppers
celebrity asset managers.
Celebrity asset managers. And I really I actually don't believe they know anymore. I believe that they have convinced a lot of people that they know more, and money helps to make money. I mean, all of those things are true. And, so does a good bull market for 12 years. Last bull market, the last 20 years have created a lot of billionaires. And I mean, just look at, Warren Buffett. I mean, his wealth has gone from $1 billion to whatever. I mean, a 1 or 2 billion to 150 billion in the last 20 years. The last 20 years, this bull market has created, billionaires up the wazoo. So were they all that incredibly brilliant and they were just lying dormant for all those years? Or was it maybe a little bit of a bull market and maybe they're really good salespeople and maybe they believed it too? It's okay. It's fair that they believed it, but I don't believe that they know any more than you, me, or the next person.
Which then makes the primary skill set their ability to persuade people that they know something, even if they don't. And maybe the easiest way to persuade people that you know something is if you believe that you do know something, because then you're not lying. You believe that you do know something.
I think that is very true. I think that's a great description.
But also, human nature is such that people want to believe that somebody knows something.
Of course they
want
do.
to believe that they themselves know something, or they want to believe that Tom Sosnoff knows something.
Of course, people love to believe. It's cool. It's look at the religion is like. That's your main thing. Just look, I mean, it's one of the things that's healed a lot of this world and one of the things that's killed a lot of this world. It's perfect. People want to believe. Believing's good. Life is short. It's good to believe in stuff. It's bad to be a non-believer. And especially in a field in finance where everybody, where people are nervous about it. They don't want to deal with it. They've got other things they want to focus on. They've got other domain skills they want to build. If I was a really good, let's say, artist or something, I don't want to waste time in the world of finance. I mean, I probably should, but I don't want to. If I'm an amazing surgeon, what do I care about what the stock market does? I got bigger fish to fry. So I mean, there's certain things I don't care about that I probably should care about because I love markets. So, yeah, I understand. That's why people want other people to do their thing for them.
It pains me. But when I looked at the thing that really got me was when I watched the energy price come all the way back after all the Russia, the war,
sure.
blah, 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 blah. And then you look at what's going on and it's like, oh, never mind. It's January. Everybody in Europe is supposed to be frozen to death with no oil. And meanwhile, there's a glut of oil.
Yeah, we're basically at a new low.
Energy resources.
We're essentially almost back to a new low today for the last year. $73 in crude.
I mean, I can't think of a better indication of the fact that nobody knows anything than that.
I mean, the war in Ukraine is at peak levels right now, and natural gas is traded under $4 this morning. That's lower than any lows that we saw in the last couple of years.
I know. And no, but which basically, if I was to go full Sosnoff, you'd say stop even attempting to explain these things.
Of course. That's what drives me crazy about traditional financial media. That was, again, the whole genesis behind this company was it doesn't make any sense. We are not there's a lot of things that have bothered me about finance. Financial media was one, because we're delivering a message that doesn't make any sense, doesn't really help anybody. There's another thing, which was technology-wise, financial technology. One of the things that always bothered me about, like, for example, Robinhood, was not that you can trade for free. It's that there's nothing that you can do on that app that is that supports a high probabilistic approach to trading, so then you're really not benefiting anybody. That's what bugs me. What always bugged me about firms like, that would gather assets like Schwab or Fidelity and places like that, was always that you're not helping the cause by limiting what people can trade in different types of accounts and the products that they can trade, because you don't even understand it. Like, you don't get what's out there. Let people find whatever opportunity they want, and let them go after that with whatever strategy they want, because that's what finance is about. It's not about what you think it should be about.
At the end of the day, whether it's wanting an expert to know more than you know, or wanting a CEO to be the right person, is the human desire to believe that someone knows ultimately something that can never be. In other words, is the size of the market for a tasty trade world in which people accept that no one knows and that it's random, and that your best path is pot odds, et cetera, because playing the pot odds and on all those things requires an acceptance that no one knows. And I just wonder, the degree to which not you, but anyone is fighting human nature. In other words, that the reason Wall Street exists, what's her name, Cathie Wood, and then the billion people before her will always exist, is because human nature is such that that the desire to believe is always stronger, that illusion is always stronger than reality.
Yeah, of course. And it's easier. It's the easy choice. It's the choice that doesn't get you in trouble. A lot of us.
Go ahead.
It's just easy. It's the simple decision that creates the least amount of pain. That's what it is.
And when you live in a world of simple decisions that create the least amount of pain, whether it's selecting the CEO for a big company, you're better off to select somebody who's already been the CEO of a big company before. When you're selecting a head coach for an NFL team, then you're better off to select somebody who's been an NFL head coach before. In other words, how damaging is that desire? In other words, how often are you ending up really with money in the wrong place, or the wrong head coach, or the wrong CEO, because all the decisions are made not based on reality, but on illusion?
It drives me crazy. A lot of that drives me crazy. And I think what you've seen is over the last, especially in like the NFL, with the move towards, younger coaches and clearly, a lot of first timers, a lot of the best coaches in football now are young guys that have never had any coaching experience before. And you see that in almost all sports. But so I think that there has been, a little bit of a change and a willingness to take more risk. I think in the CEO thing, we've had this discussion before. This is another line in the sand topic. You can get people that are too young, and you can get and too fragile. The Sam Bankman-Frieds, the Robin Hood guys. There's example after example after example in the in a certain age bracket that have just not been up for the moment, and then you have other examples where you can go the other direction and just make a completely horrible mistake by going too old, too conservative. It's a real challenge.
do you accept that the best way to make a decision is to find someone who's done it before? Whether it's a football coach or a CEO or
No.
an asset manager
No.
or a
No, I do not accept that.
But if you were going to have a heart surgeon, you'd want a heart surgeon who's done heart. You wouldn't want to be the first go
That's
on
correct.
the operating table.
That's correct. If I was picking a heart surgeon, if I was picking a pilot, I want people that have had flying time and and plenty of experience
Time in the OR.
Yes, exactly. But if I'm for other things, I'm okay. It really depends on the situation. Sometimes I feel like it's brains or decision making or future talent over anything else, and other times I feel like, hey, you know what? We better have someone with a little experience here.
And how do you make that decision? Because that's kind of the whole thing.
I don't know.
Right.
I don't know. Like, that is really the challenge. I mean, we have had very mixed results throughout my career in hiring different CEOs for different roles. We've had very mixed results. We've hired some superstars and some complete busts. And every time, the thought process was, oh man, this person's going to be a superstar, and they were a bust. And other times, this person's going to be a superstar, and they've exceeded our expectations. And they've been all over the map from young to old. I really don't know.
If you were hiring a head coach for the Bears, would you rather hire someone who had previously coached an NFL team or not?
No.
Very quick to answer that question.
I know. I'm very quick to answer. No. I think.
So you don't want prior experience for NFL coaching, for instance. You actually sound like it's a negative.
I mean, for me, the reason I feel like it's a negative is because I want. I feel like if you're taking over, and your team consists of a bunch of 21, if the average age is 22, 23, or 24, I want somebody that can relate to those people on a very personal level. I don't think this is old school respect. Like I'll give you an example in Chicago. The Chicago White Sox hired Tony La Russa 2 years ago. Tony La Russa was like 75. He's a Hall of Fame manager.
Legendary gentleman.
Yeah, it took, yes. And he's taken teams to the World Series. He's won the World Series, in the Hall of Fame. Hated the hire. He's 75 years old. He had a team of mostly Latino players from the Dominican, from Cuba, from Venezuela. Okay, they're all 20.
Average age is 22 or something.
Average age 22, 23. Nobody even spoke English. I mean, they did, but they had translators. Okay, and you hire Tony La Russa as your manager, 75-year-old white guy in the Hall of Fame. Okay, it never worked. Failed. It was a miserable experience. They came in, tied for last, and with a good team, a lot of talent. Didn't work. So, no, I don't think you need. That's a perfect example. No, you did not need that Hall of Fame manager. I think the same thing happens in business. You find somebody that's taken a company public. You find somebody that's had a big exit. There's lots of things. Some of those people are great, and some of those people, if they did it on their own, I'd probably be more inclined. If they just came in and they were hired guns, I would not be interested.
Do you think it's important for a CEO to have been a CEO before?
No. I think it's important for a CEO to be able to make quick decisions and be confident in those decisions more than anything else. I think the key to being a really good CEO is to make really quick decisions and not try to outthink yourself and not try to outthink everybody else. Just trust your instincts and go with it. And that's what makes a good CEO, because then people can trust you.
Do you think that a CEO has more power to destroy a company than make a company? In other words, is the key to a CEO hire to just get somebody who's not going to F it up?
That would be companies make that mistake. I think that's a disastrous plan. I think when you hire anybody whose objective is to not mess it up, that's a plan for failure. I don't even know how you can. I don't even know what the thought process would be to do something like that. I really don't.
I'm still intrigued by the gap between, because I find it so hard to even believe after a decade of interacting with you, and it's like the fact that expertise can be so widely acknowledged, everyone for sure, like this person is an energy expert or this person is an automotive industry. I mean, and no one will question like that. There's an expert. Like, my goodness me, they'll talk to you about for any sub-vertical of that domain. They can go on and on about the rivets or the power systems or the supply chain or the export-import tax law or whatever the hell it is. And still, when it comes to their opinion of future price action, whether it's the secondary market for automobiles or natural gas, useless. It doesn't make logical sense that someone with so much expertise could be no more reliable in predicting a price than with someone with no expertise. Which I know, listen, this goes forever. Wall Street Journal with the monkey, and they throw the dartboard and they put them up against the best fund managers, and it doesn't make sense.
My first job out of college was with Drexel, and I was in with a bunch of trainees. There was like 25 of us. It was like 1980 or something. And they said, wear a suit. Okay, this is 1980. I had a suit. They said, wear a suit to work tomorrow because you are going to meet the best automotive analyst in the world. He's a either a consultant for us or he works for us. I believe his name was David Healy, but I'm not 100% sure because it was over 40 years ago. And they said, you're going to meet this guy. We want you to be in a suit. We have a luncheon. He's going to give you a talk. He's the top #1 rated analyst in the world for any industry, but he's an automotive specialist. And he came in and he was smooth. And he came in and we were all mesmerized because, hey, here we are, a bunch of 22-year-olds, 23-year-olds, and we're listening, a small group of 25 to the best. Supposedly, they paid a lot of money for this guy for this one day to talk to us, the best automotive analyst in the world. And he gave us a lecture, and he said, if you have any money, if there's anything you're ever going to do, what you have to do is just go out now and buy as much Chrysler as you can get your hands on. And he gave us a whole lecture on this whole thing. After that, I was like bouncing off the wall. I was ready to, I didn't have any money. I only had like $500. And I was ready to,
information.
I was debating if I should go home and ask my mom to mortgage the house, okay? Hey, Mom, mortgage the house for me because I got this information. I thought it was inside information. I didn't even know. I'm like, my God, like I just heard a lecture. This stock is going to explode. It went straight into bankruptcy, never had another uptick. Literally straight into bankruptcy.
So how do you explain that?
I didn't need to explain it. I knew at that moment that I got this business. I got it. It was the best thing that ever happened to me. I got this business that moment. I left that firm and went to trade in Chicago just because at that point I knew this is all bullshit. Nobody knows. The traders are the only ones. It's it.
But how do you explain the gap?
I don't know. I mean, it's the way it always was. I mean, high fees, wide markets. It's mostly high fees and wide markets. So the wide markets kept the specialists alive. The high fees kept all the financial firms alive, along with all the, every other fee. And the concept of positive drift kept people positive. That's it. 40% went to a positive drift over, 100 years. 40% goes to the financial firms. 60%, went to the customers, maybe less, 50%. And that was life. Like, that's the split. It was 60-40, 50-50 after fees over a certain period of time. And everybody was happy with that. The customer got more than whatever the standard rates, interest rates were, rather than whatever free cash flow was at the time, or whatever, risk-free rates. And on the one hand, and then the industry got 40 or 50% of all the money that was made on positive drift, and that's all there was. Hey, welcome to finance. Until, some 80 years later, we figured out, hey, we can build some really cool software. We can trade this stuff. And there's high frequency market making, and there's everything else that we always did on the floor, but now you can do it, from your computer.
And the only thing that matters ultimately, I'm going to be redundant, but it's remarkable to me that you can have that level of expertise and be that wrong, and that you can be that wrong that reliably.
Amazing.
I mean, that's really what I thought when I looked at natural gas prices, because I just came back to Europe.
Yeah.
It's January.
Yeah.
It was supposed to be, the apocalypse winter in Europe.
$15 for natural gas. It's $4. Sure. Yep. Russia's going to block all the natural gas leaving. You got to buy this and that. Nobody's got any natural gas, blah, blah, blah. Texas
Everybody's going to freeze to death.
Yeah, of course. Now you can't give it away.
I mean, it's ridiculous. It's like, what does the world come to when information is useless?
No, this is the greatest thing ever. This is the level playing field that everybody wants. They just don't get it. That's the whole thing. Information's not useless. It's the information's wonderful. It's the type of information. We've been delivering the wrong information. So information's not useless. It's just how to utilize it. And there's a massive amount of opportunity, liquidity, whatever you want to call it. So how do you utilize it? It's the type of information. It's just, that's what's changing. The markets are more efficient than ever. It's great. So the fact that, would you rather be in a corrupt system where you have no chance in a corrupt system, or in a random system where nobody has any edge? Of course, you'd much rather be in the random system. Then all you're working on is mechanics. That's cool.
And when you say mechanics, at the end of the day, you just come back to implied volatility relative to itself.
No, that's one mechanic. That's one aspect of mechanics. But there's lots of them. You can argue that by looking at implied volatility, you can gather whether something is overbought or oversold. Some people think that it's fine. There's lots of different things. You can argue that product A is cheap relative to product B, and they're in the same space. There's a million different combinations of strategies that you can apply. Millions.
But choosing the CEO or asking the expert is not one of them.
Right.
It's because it all comes down to pot odds.
Yeah, but Dylan, I think it's okay to bet on visionaries, to bet on superstars. I think that's okay because I think that's different. I don't think it's okay to bet on operators. Like I don't want to bet on a quarterback whose job it is not to lose. I want to bet on a quarterback whose job it is to win. That's why the Tom Brady's of the world are so freaking amazing, because for 20 years, that's all they do is win. Okay, that's why you want to bet.
Does that exist? Would you? Is that a reason to bet on Elon Musk in the middle of his fricassee?
Probably. It's as good a reason as anything else. Sure. It is as good a reason, but it's a reason that it was a good reason to bet on Michael Jordan through all those years. It's a good reason to bet, on different superstars in different sports. It was a good reason. Why to bet on Argentina to win the World Cup. There are such a thing as, there are different people with different wills to win and the ability to, act on that. I think in the markets, it's a little different, but I do bet on visionaries.
Who's the biggest visionary in the stock market today?
Not a visionary. On entrepreneurial visionaries, not stock market.
I understand, but who do you think is who are there people that are among the visionary class as we go into 2023 that are notable to you?
I would have to think about it. Off the top of my head, I couldn't give you an answer.
Because we're kind of in the rotting phase of the most recent generation of visionaries. Right?
Yeah,
Facebook is in the rotting phase.
Yeah, of course.
Tesla's in the rotting phase.
Yeah. So my world is smaller than that. I live in a small world, and so the people that I feel like potentially that are visionaries are, they're running small startups or, companies that we've interacted, like people that I know, like things like that. I don't really have a public company
point of view. You're saying you're more inspired by somebody who is a tech firm that has some value proposition for Tasty Trade.
Exactly.
That you're having a personal interaction with, or you're able to
we're a small company. I mean, I'm not, I can't think that big. It's not my job is to build value for our company. That's really what I am. I mean, my job is to figure out ways to build value for our company. And I am very focused on that. That's it. All the new projects I'm working on for 2023, it's all about building value for ourselves and creating new products so people will find our stuff really, interesting, innovative,
and how
creative.
Much of your business's outcome or any business's outcome do you think is a function of randomness? And in other words, is the randomness dynamic that plays out so clearly with natural gas prices or with public markets?
I mean, our business does have an element of, and like I try to explain this to the analysts, and they kind of laugh at us, but our business is. Interest rates are a big part of our business, and interest rates matter to us. And we have no control over it. I mean, volatility matters to us. If there's volatility in the markets, our business is better. If there's no volatility, our business is slow. So we do function off random things like volatility and interest rates, and so we have no control over that. And it just is what it is. So I'll talk to some analysts. I go, "Oh, you guys didn't do that good this quarter." And I'm like, "Hey, you know what? Volatility was the lowest it's been in 2 years." And they're like, "That doesn't matter to us." And I'm like, "Well, that's the way it is." Or they'll say, "Why is your revenue down?" I'm like, "Well, they dropped interest rates, so we made less money." They're like, "Oh, that doesn't matter to us." Okay, well then, what do you want from me? That's
what are we doing here?
Yeah, I mean, this is the nature of our business. But then the other side to it is interest rates go up, we make more money, and they're like, "Oh, you guys are geniuses." We're like, "No, we're not. Interest rates went up." It's not that. It's understand what you're looking at, really, is what it comes down to.
But at the end of the day, your whole premise is managing randomness is the entire
randomness and managing expectations around randomness, and at least being able to appreciate that is very important, because once you can appreciate that, you can be much more effective as a manager. You don't get hung up thinking you're some kind of genius. You don't believe your own bullshit.
And you manage other people to control the domain they can control.
That's right.
And understand what they can't control.
That's right. Yeah, my job right now is to work with a bunch of young kids who are ultimately going to take over, all the stuff that we're building, and to say, "Hey, listen, this is what you should expect, and this is how we think of things. And if you want to be successful, this is the approach we want you to take." And they get it, man. They're smart. That's the most fun stuff I do right now.
I still can't believe natural gas is. It's January. The war is unrelenting.
It's $4, a little over $4.10. Anyway, it's we've gone the distance here, Mr. Radigan. We're out of time, but that was a fun discussion today. That was different.
Well, the randomness guy, I just feel like there's I want to bring in, I need a psychologist or something. Because even you, when it came down to it, you said, "I don't know." You said, "I can't explain why this is. I can just explain that in order to manage its existence, I recommend these mechanics and blah, 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 blah." But you don't know why.
Hey, fooled by randomness, man. This happens to everybody. It's a great line. Not a huge fan of the book, but fooled by randomness is a great line.
Great line.
I'm Tom Sosnoff. He's Dylan Radigan. This is Truth or Skepticism. We do it every Wednesday at 1 p.m. Central Time on Tasty. And we've been doing it for years now. I hope you really enjoy it. We try to find different topics every week and have some fun with them. Dylan, until next week.
We'll see you.
We'll see you. Be safe.
In 7 days. All right, bye.